Good afternoon and welcome to the Nexus Infrastructure PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and could be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Charles Sweeney, CEO. Good afternoon, sir.
Thanks, Lee, and good afternoon, everybody. Thanks very much indeed for attending this presentation of the Nexus full year results for FY25. Myself and Dawn will be running through first an introduction to Nexus. We'll then look at strategy and progress. Dawn will pick up on key financials. We'll have a review of the markets. We've got some case studies, and we'll take a look to the future, and then we'll wrap up with a summary and close. So for those people not familiar with Nexus, we've got two operating subsidiaries, Tamdown, mainly focused in the house building sector, and Coleman, mostly active in water and rail. I've got a couple of things to say about them. So Tamdown, celebrating 50 years this year in business. It's recognised for its experience and capabilities in large, complex, multi-phase developments in the housing sector, and you can see in the listing below that it's basically working for all the big players, national players in housing development, Taylor Wimpey, Persimmon, Bellway, Vistry, and so on. Turning to Coleman, so Coleman's main, as I said before, main activities in the water sector. It's been in business for 25 years. Has some activities in rail also, but the main thing we'll be talking about today will be its activities in water and the opportunities looking forward. So with regards to our strategy and progress, so 2 years ago, we set out a new path for Nexus, one which would basically stabilise the operations and give us a chance to get back to growth and profitability for the group overall. So I'm pleased to say that the approach we have taken has been bearing fruit. So these are our three strategic objectives. So first was to be able to grow with our customers. So we set about customer focus, paying great attention and listening to feedback and doing what we could to service those key customers. And that's basically borne fruit. And you can see FY23, the amount of work won was just 32 million. In FY24, that grew to 56 million, but even better is that in FY25, we've secured just about 89 million pounds of new business. And that at a time, as we'll touch on when we look at the market sectors, when the house building sector has been pretty much in a very poor condition, flat at best. So we've done very well with that. The second one was expanding our market, and in this instance, we wanted to look towards other sectors whereby these would be countercyclical, that we would not have the problems of the ups and downs only in the house building sector. And we also wanted to have sectors which would have higher margins. So with that strategic objective, we acquired Coleman at the beginning of FY25. I'm pleased to see that during the course of FY25, the gross margin delivered 31%, very much higher than that which is possible out of the house building sector. And then finally, on the matter of focusing on financial delivery by basically driving operational improvements and making sure that we're maintaining a tight control of costs. You can see that the Tamdown business, we've been able to nudge up on the gross margin, 13.5% to 14% year on year there. And then looking at the Nexus overhead costs, the central costs. And these are exceptions. It's excluding the costs associated with the Coleman acquisition in particular. And you can see there FY23, 2.4 million, down to 1.9, and then 1.5 in FY25. So, okay, that's just a snapshot. I mean, we're really excited by the progress that we've achieved. We've still got a long way to go, but I think there's many reasons for us to feel positive about the progress so far. Dawn's going to talk now in more detail on the financial figures.
So we were really pleased to see an improvement in the key financial indicators during the year. This was due to a mix of operational improvements in Tamdown, the acquisition of Coleman, and the continued focus on reducing our overhead costs. Group revenue increased by 16%, with Tamdown's revenues up 6% to 60 million, and Coleman adding 10% of to the group revenue at £6 million. Gross margins for the group improved by 2% during the year. This was partly through an uplift on Tamdown's gross margins by 0.5%, which improved from 13.5% to 14%, and then Coleman's gross margins, which come in plus 30%, which helped to demonstrate the positive impact that diversification is having on the group's performance. We continue to focus on managing central costs and reduce these by 390,000 in the year and over 900,000 in the last 2 years, despite the increase in the size of the group. Each of these factors contributed to the reduction of the loss in the year to 1.1 million, and as expected, H2 performed at breakeven. Our exceptional items in 2025 related to the acquisition of Coleman and were split between advisor costs and an accrual for the deferred consideration, which is based on earnings targets over the next 2 years. Nexus continues to have a strong balance sheet with net cash of 10.9 million at the end of the year. This puts us in a strong position to manage the working capital requirements from both Tamdown to support its increasing order book and Coleman as AMP8 work releases. Tamdown's order book increased by 62% in the year to 83.4 million and is actually up 81% over the last 2 years. And this has given us good visibility on future revenues over the coming year. An improvement in the debt position continues, with Tamdown seeing the benefit of a commercial director and their overdue debt improving by 39%. Coleman are paid to predetermined payment terms, minimising the risks to payments not being received. And all of that contributes towards our improving cash position, despite having spent and having had an outflow of cash of nearly £4 million for the acquisition. The board are then recommending a final dividend of 2p per share to maintain the dividend level of the last 2 years. Charles will now sort of take a review of the markets.
And so, first off, for those that have sat in our presentation previously, you will be familiar with this. So it's the house building sector, and we're looking at the government target, 370,000 homes a year for England. And you can see that the gap remains significant. In fact, the gap in 2025 worsened slightly. So that's not a good position to be in for the sector overall. However, the reasons for optimism behind this would be that the changes that they brought in with regards to planning regulations will be now finding their way through the system and should be having an impact. And then, subject to what's been going on in the Middle East recently, we expect to see the reduction in mortgage interest rates, with the Bank of England rate at the moment at 3.75%. Anticipation was that we would see that decrease further during the course of the year. And finally, the spring statement, I have that on over in the corner over here, the spring statement, so the Chancellor's finished the spring statement, but not expecting too much to come out of that. But I think there is significant political pressure building on the government, and they will want to see something that they can headline, and the house building sector is certainly something which would be key for them in turning around their position and winning votes. So that's a possibility. If we look at the circumstances we find the sector, residential planning approvals, look at it, just like disappearing off the chart, and that's through to the third quarter in 2025. However, seeing that there is a positive light on this, I could say, is that we could question, are we reaching a point, an inflection point? Looking where we were back in the days of 2012 and how the sector was able to build from there, we could question whether we are at that sort of position right now. And as I say, reasons for that would be the changes to planning regulations and the reduction in the mortgage interest rates. So we will see as we go forward whether that is actually an inflection point. I've got a couple of other slides to show on this, food for thought. This is NHBC warranties, so the number of registrations of new homes. So they're up 12% in the private sector, 11% overall on 2024. But that doesn't mean too much. You can see across the chart there, that could just be an anomaly and doesn't really tell us a picture overall. So if I step to the next slide, this one is information from the planning portal operated by TerraQuest. It's public information. And here, what we're looking at is the number of proposed units in planning applications. So these are not applications that have been approved. It's one step earlier. It's the number of actual units which are being applied for planning applications. And see how from 2022, this was definitely in decline. But there, 2025, the number of applications is significantly up. It was 210,000 in 2024, and it was 335,000, still short of the overall targets the government has got, but 335,000 in 2025. And if I don't kill everybody with too many slides, if I present on further here, you can see this on a quarterly basis. So testing eyesights here, you can see in the beginning of 2024, the quarterly number is very low, except if I see there, it looks like 40-something thousand, very low number. And then over those quarters, it's just been picking up. And in particular, the last two quarters of 2025, we saw a significant increase. And those are there in the bright green histogram shown there. So do we think that this is necessarily the recovery of the housing sector? I don't know. I mean, there's lots of different factors, isn't there? However, looking at it from the other angle, if this was just a flat line, we would be certainly thinking doom and gloom. To see that there is such an increase in planning applications is certainly something which is of interest. So I'll leave that as food for thought for now. Strategy in action. So we'll look just at a couple of examples of what would be a typical good-sized projects for Tamdown. So this one is Vistry, Tovell, Kent, near Maidstone. £17 million will last 4 years. Project commenced in April 25. Overall, 270-ish units, 6.5 kilometres of roads, etc., etc. It is a civil engineering challenge because there are, in addition, large underground storage tanks, 13 of them, which will be used to capture rainwater to prevent flooding. So significant project and the sort of project that Tamdown excels at. And there's good words there written by Brendan Evans, the regional MD of Vistry Group, shown there. Got a second example, similar to in size, 16 million, this time for Bloor Homes, and it's in Basildon, Essex. A little bit longer duration, currently planned as 5 years. Project commenced in November 24. 269 residential units, etc., etc. And it also has this sustainable urban drainage system. In this case, it's mainly a large basin, which is partly shown in that picture. There is one underground storage tank. 7 areas of section 278. That's where we're actually building roads and altering the existing highway, like roundabouts or bell mouths, to get access to the site. So 2 good examples of the type of jobs that Tamdown takes on. And even better so is when, as we've said, when these are a phase of a project where there may be several phases, and the overall maybe 10 years in length. So it's a great opportunity when we get at the early phases of such a development. With regards to the water sector, so the story we know is it's all driven by non-discretionary spend. These are projects which are driven, unfortunately, by climate change. So to ease the problems of flooding that we've been experiencing. So how do we deal with that? And then also the matter of droughts. How do we maintain? It's hard to imagine droughts right now, the winter that we've just had. But yeah, the subject of droughts is high on the agenda. It's not down to whims. We have to do this expenditure. So the AMP8 programme, as approved, is 104 billion versus the previous 5 years, 61 billion. The one thing I will say about this, and again, we can talk about this in a little bit more detail, is that the AMP programmes, as projected, they started from 1st of April last year. They've been slow to get off the ground. It's pleasing to see that it's now coming through, but it has been slower to come off the ground, not just in the water companies that we deal with, but across the country. We'll say that, but it has been slower to start. Magnitude of the project's still the same, but the timing for when they're getting underway has been slower to start. So our acquisition, Coleman, that we mentioned previously, it's a great business, great team, led by Barry Coleman, and there's some words given there about his excitement of joining the group so that we can able to help the business flourish further and develop and grow. So a couple of things that we've done during the course of the year. The integration's gone very well. Super, as I say, they're a great team. But we ran a program, Building Sustainable Growth, and this was basically to look at every aspect of what the business will face as a result of what is going to be quite a significant growth in revenue. So we looked at such matter, well, obviously the obvious things of the recruitment process, making sure the right number of project managers in place, commercial people, and so on and so forth, and site personnel. But in addition, through to the whole matters of how we'd be communicating, what systems should we use, and of course, finally, working capital requirements and making sure we've got the cash for to support the working capital. So it's gone very well. Looking forward to the second half of the year where we'll see that really pick up. So just here was a snapshot from Southern Water's information that they present. This is why it's exciting to be involved in this. It's a 25-year horizon they're talking about. Difficult to read off this slide, I guess, but along the top is AMP8, which runs through to 2030. But then the following AMPs through to 2035, 2040, and so on and so forth, through to 2050, are all part of the plan. And I'm going to use this term again, it's just not discretionary spend. So this has to be done. If we're going to be able to deal with the droughts and deal with the floods and deal with preventing the pollution of the rivers and the beaches and so on and so forth, all of this has to be spent. From a water bill payer, it's not exciting for any of us, but from a construction contractor point of view, it's a very good sector to be involved in. So an example project here for Coleman. So this £2 million, just over £2 million at Tunbridge Wells. There's reference to the new pumps and pipe work, very congested areas, difficult working conditions. But there's the final settlement tank, 25 metres in diameter. And the client absolutely thrilled with the work that was done. So, and it's highly valued experience and rare. There are not that many contractors that have this capability. So I think the immediate customers that we have and those that we will have in the future will certainly value the experience and capabilities that Coleman has. So as a summary, so we set out the strategy, we say, it was a couple of years ago to stabilise operations and then have this new path for Nexus going forward. So we would be introducing growth and getting the group back to profitability. So here we are 2 years down the track from that. And the revenue is up year on year, 16%, gross margin 15.6% from 13.5%. We've reduced the central costs, excluding the exceptionals, to 21%. The order book is up 62%. I mean, that's terrific to see. The operating loss is on the right path, been reduced down further by 42%. And we're saying that the outlook is really promising for the long term for the house building sector. And in water, AMP8 has a doubling of expenditure for the next 5 years alone, and it's a 25-year horizon. So based on this, with the position that we're in, with a strong order book, I think we've got the foundations in place for this current year, FY26. It will be seasonally H2 weighted, but we've got a promising future ahead of us with what we have in place. So at that, we come to end of the presentation, and we'll hand back for questions and answers.
That's great. Thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. We have received a number of questions today, and if I may just start off with the first question here, which reads as follows. Can you improve the liquidity of Nexus stock? Other than the routine compulsory announcements, could you issue contract news via RNS?
There sounds two parts to that question. I guess on the, if I heard right, the liquidity of the stock, then there are options from a corporate point of view, I guess, which would be issuing of new shares, but that's not part of the plan at the moment. So with the shareholder base that we have, what we have started is a process of trying to get the word out there more, spread the word of what Nexus is up to. So we had an event, Mellow Monday, which was in October, which we presented at, and it's our intention to continue to attract new shareholders, which would improve liquidity, with a particular event that we're planning for the summer, amongst other things. I don't, Dawn, is there any other thoughts you might have on that?
No, I think it's very market driven, the liquidity on our shares, and we have to reach out and continue as much engagement as we possibly can do to reach new shareholders.
The second part was the matter of presenting information. I think we've had that before, and I'm conscious of that. Is something that we need to follow up on. We take advice, of course, from Alma as our advisor on the whole matters with regards to investor relations. So yes, we'll take a look into that to see whether we could engage more and provide information at times of, let's say, when we are awarded significant contracts. So that's a takeaway.
That's great. The next question we have here reads, when do you expect to report a profit?
Our current research out there shows us a break-even in FY26, and then we expect profitability to be on a continual improvement line over the next few years.
Thank you. Have you pitched for any local authority contracts?
No, not as yet. It's not part of our strategy at the moment. So as we've said, we are looking to diversify the business, but local, I think you said local authority work is not something that we have a strategy at the moment.
Thank you. Why has the number of Nexus site workers reduced?
It's the way it's presented, because in actual fact, the number of site workers has increased and will be significantly increasing during the course of H2. It's the number of directly employed personnel. So we took a view, not this last year, but the year before, about the way that Tamdown would go to deliver its work. So we have a higher percentage now of self-employed, subcontractors and agency personnel compared to the number of people that we have as direct employees. So if you actually went, and you can't tell the difference when you're on the site, you would just see that the percentage is a smaller percentage now are directly employed. So we actually have more people on site now than we'll have in the second half.
That's great. Are you contemplating further acquisitions?
Well, at the moment, we're certainly ambitious. It's the second, as we said, the strategic objectives, which I'm partly repeating, is this idea of diversifying and reducing cyclicality, and in particular wanting to get to these higher margin sectors. So At the moment, we're driven by that. We'll see, and we'll view shareholder feedback. The board will consider opportunities, and we'll take into account how we're doing with the current strategy. So that's all I could say at this point on that.
Thank you. Just turning to the next question. How do you attract new institutional investors?
So I think we're partly touching back on an earlier question. So I think what we have to do is to continue to present the long-term attraction of the sectors that we're involved in, which is where institutional investors are often into long-term returns. So if we present the sector information and we present the performance that we're achieving with the businesses that we have and our strategy, I think then we should get a good level of interest from institutional investors.
Thank you. In addition to CMPD, who do Coleman work with?
So there are, both in Southern Water, there are other tier one contractors which Coleman is able to work for. And in addition, just in this last 8-month period, there have been a number of other water companies. I mean, you don't have to go too far out of the geography. You would see Southeast Water and also Thames Water, which I know can set some alarm bells ringing, but they've equally got a huge amount of expenditure. So they are within the geographic patch that Coleman has at the moment, which runs along the south coast, and many exciting opportunities. So we will, just on the water side of things, we will ensure that we stick close to the customers that we've served over the recent years, and we'll build upon that, looking to other water companies via their main tier one contractors. And you'll see that in our results in the coming years as to how we've achieved that.
Thank you. Within those early phase awards, are they generally structured with clear pathways to subsequent phases, or are they more standalone in nature?
The majority of the work that Tamdown seeks and does get involved in is multi-phase developments. And there's no guarantee. If it ends up there's going to be 8 phases, there's no guarantee that just because you get in the first phase, you're going to subsequently get positions on the second, third, and so on. However, for sure, it's the case that deliver according to plan, provide a quality service, and a service which the customer can feel assured about, does give an edge, and it only makes sense that that customer is likely to give an opportunity to Tamdown to continue onwards. So yes, ideal if we, and there are some around where we see the value overall is 30-40 million pounds just in the primary, let's say 3 phases, and we can see that in front of us. But the overall development perhaps goes to like 10,000 units. Those are around, and it's great to be involved in those at the early stages because you've got a 10-year horizon in front of you, as we say.
Thank you. Just moving to the next question. Over the past 5 years, how have face-to-phase conversion rates and scope expansion on multi-phase projects trended?
Oh, I'm sorry, I didn't catch that.
Over the past 5 years, how have face-to-phase conversion rates and scope expansion on multi-phase projects trended?
I don't think I'd say, it's probably partly in line with what I said before, is that there hasn't been a particular trend. And what I can say is that the win rate for Tamdown is being consistent at around 30%, a little bit better than that, 35%. And the work tends to be multi-phase development, so maybe you can put the two together. But I don't think there's been a trend in one direction or another. So that perhaps doesn't fully answer the point. I can add in some other things, would be Tamdown. For those not familiar, Tamdown is definitely the first on site. So when the housing sector is picking up, then the Tamdown is the first to experience that, being the first trade on site, if you like. Second thing I would say is that to the end of January, we were looking at the Tamdown, the volume of invitation to bid invitation to tender levels, significantly up on the previous 4 years. So that's a good indicator. I think it was 250 million, I think we were at. And the number of tenders that we've actually submitted, because we don't respond to every invitation to tender. So that was at 150 million. So 150 million of good quality tendering has gone on just to the end of January. And that again is up on what we've experienced in the past 4 years. Again, who knows how things are going to turn out? You never quite know. But these are all sort of positive leading indicators that I can refer to.
Thank you. Are you seeing any changes in client behaviour around project timing or scope?
So we do have examples, both ends of the scale. It's not going to be helpful to whoever asks the question. We've got examples of both ends of the scale. Maybe the first side, which is the most interesting, of course, would be more typical when the market is buoyant, and that is we've been through the cycle of the invitation to tender, the negotiations, and so on and forth, and then we get the award, and then it gets started on site as soon as you possibly can, which can be within a week or a couple of weeks, and that would be more typical, I'd say, of a buoyant market. So we do have some of that going on, but there's also been a few examples of where we have been given the award, and a couple of examples where the activity level has actually been quite slow, and the client has actually gone through the execution phases in a more pedestrian way than we might have liked. And there's one particular example where the award was made at the early part of this financial year, yet the project didn't actually get underway until January. So, and that was again while the client was satisfied with the pricing, satisfied with Tamdown to go ahead with it. Award was given, but start on site was held back while they considered how the market was going.
Thank you. One customer accounts for the vast majority of Coleman's revenue. Are these multiple projects provided to a single customer or one large project?
So again, if I heard that correct, the Coleman projects are multiple projects. The vast majority of those, not all, but the large majority of those have been through the entity. There's a joint venture between Costain and MWH. So that's CMDP plus, but not in its entirety. Work done for others as well. And in addition for Coleman, currently about, is it 20%, Dawn? The revenues is rail?
Yes.
About that.
Yeah.
But as I say, in the last 8 months, the inquiry levels and the work activities is now spread. So doing far more work for other than CMDP plus. But I'll re-emphasize this point. Our building sustainable growth is built around the concept that we will keep the core activities and focus on CMDP plus and some water, and we'll build out from that. So, because we do want to retain our close relationship that's been so successful over the last 5 to 10 years with CMDP.
Thank you. Just moving on to the next question. Do you expect Coleman to represent a larger proportion of group revenue over time?
Well, that's a good one. I'd like to see, definitely, in the near term, is that Coleman will double in size. And what we're very conscious of, Don and I both, hope you don't mind me saying this, Don, long in the tooth, being in the construction business a long time, I'm very, very experienced. So what we won't do is we're not going to overstretch, because that is just a nightmare. 3 or 4 years down the track, you've got problem projects, quality has slipped, and so on and so forth. So we won't be doing that. But we will see in the near term, we will see a doubling of Coleman's size, and even within Coleman, that diversification will come into play as well. So Coleman on its own, with that trajectory, in this sort of time frame of like 2 to 3 years, is definitely not going to overtake Tamdown, and Tamdown is going to be growing itself. So after that little bit of a waffle, the straight answer to the question that was asked would be no, not in the short term.
Thank you. Specifically for Tamdown, how many bidders are you seeing on average per contract today versus pre-pandemic levels?
Don't think it's any different.
Perfect. What type of central overhead are you aiming to achieve? Can it go further down from where we are today?
I think it's probably as low as we can get it, but it is not something we ever take our eye off. We're conscious that a lot of money has to go into the regulatory space and make sure that we're compliant in all cases. Audit gets more expensive every year. So it's something we continuously keep an eye on, and if we can get it lower, we certainly will do.
Perfect, thank you. With your view and contracts in the water sector via Coleman, do you think there might be possibilities for the Tamdown Earthworks team with respect to the new reservoir schemes being talked about at the moment for the first time in about 30 years?
Certainly we have plans in place for seeing what we can do for the businesses, improving the integration of, I don't actually mean, I've said integration, I don't actually mean joining the business together, but there are some aspects where we can benefit from, such as procurement or access to career development. We can swap people around and so on and so forth, sharing of resources. But as things stand at the moment, operating in the water sector requires a certain level of experience and background and capability, and as they call it, tickets for people that work in the water sector. So for sure, if we saw that there was a need from a group point of view, or size of business point of view, to approach some of this larger work, the reservoirs that's been referred to there, then we could do that. But as things stand, I really do see that both Coleman and Tamdown, for the periods ahead, we pick up in the second half of this financial year and then beyond, are going to find themselves quite busy as they are. So we're certainly looking at the reservoirs and seeing if there are opportunities. Mainly it's large earthworks development activity, but something that we'll keep our eye on.
Perfect. And just one final question to wrap up on. Why would this be a good time to invest in Nexus?
Well, I'd say, well, first of all, it would be for somebody looking across opportunities of which sectors to be involved in. If you have a belief in the housing situation in the UK, and that we're at a low point now in terms of delivery and sector activity, and that the sector overall has got a significant increase ahead of it as an opportunity. And equally on the water side, the water sector, for the things I've said, that the water sector is equally has got a low point and is now about to embark upon the huge AMP8 investments. That would be a starting point. So it would be, you'd have to have an interest in the sectors and an understanding of the sectors and where they are in the cycles would be a starting point. The second thing probably would be, should be that you take a look at how we're doing, what we've done with Tamdown, the Tamdown guys, the Tamdown leadership, what they've been doing to turn the business around and to achieve what they have done in terms of the growth and that significant order book growth of 60-odd%. And equally looking at the what we've done in terms of bolstering and assisting Coleman. So from a sectors number one and individual businesses number two would be reasons why you would consider investment in Nexus. The third thing would be, do you believe in what we're saying? Do you think that the sector, that the strategy that we presented as Nexus overall has got merit? If we're doing the right thing, and I absolutely 100% believe we are, we're on a path and we see huge opportunities, and the way Nexus is approaching this in a measured way with a strong robust order book, giving us many opportunities and flexibility for options going forward, but also ensuring we're here for the long term, then those will be reasons why someone might consider investing. It's not for me to advise whether you should or shouldn't, but hopefully sectors, the companies themselves, and Nexus strategy and overall view for the future, if they're ticking the boxes for you, then yeah, go. I think it's the right thing to do. So that's all I could say.
That's great. Thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Charles, could I please just ask you for a few closing comments?
Well, I'd thank everybody for attending this presentation. Hopefully, we've given you an overview of where we've got to, the progress that we've made. I've got a couple of other points again written here. The order book's up 62%, central costs are down 21%, gross margins 15.6 from 13.5, got a 16% increase in revenue, and we've achieved this in what has been a flat market, difficult market in the house building sector. H2 in particular is going to see the businesses' opportunities flying. So I'll just say thank you very much for attending and for your interest. Thanks very much.
Charles, Dawn, thank you for updating investors today. Can I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of Nexus Infrastructure PLC, we'd like to thank you for attending today's presentation and good afternoon to you all.